Welcome to this video, which is all about a very simple Forex trading strategy, which will help you catch all the big trends and profits. And by big profits, I mean 1,000 pips or more per trade. Now, the actual strategy itself, I'm going to go through in this video with a couple of examples as well. And it's based upon knowing the big fundamentals and using them in conjunction with your technical analysis to generate and hold trades. Now, a lot of people might be watching this video and saying, well, you don't need to know the fundamentals at all. All you need to do is follow price action. Everything is reflected in the chart. Well, I am a technical analyst and I do believe that is true, but there is a huge advantage of knowing the big fundamentals because they drive the chart. So you can get advance warning of when a big move might be starting. And by knowing the big fundamentals, you can actually gauge how far a move might go, i.e. decide whether it is going to be a big trend or not. Now, in terms of the fundamentals, there is a saying in the markets which goes along these lines, which is big fundamentals rule the long term, greed and fear rule in the short term. It's very, very true. If you look at any chart, you will see big trends. They'll last for many weeks, many months, sometimes even years. And it doesn't matter what pair you look at, that phenomenon of big trends is always there. Of course, there's volatility within the trend where greed or fear might spike prices too far to the upside or downside, but the big trend is there. You can see it on any chart. Now, in terms of technicians, most have a problem in holding big trends when they're just looking at price action. Why? Because they haven't got the confidence to hold the move. And I think that's where the big fundamentals can really help you hold a move on the chart for longer. Yeah, most technicians make the mistake of snatching a profit too early or putting their stop up too close once they've got a profit. They then get bumped out the market, see the trend carry on the way they thought it would, and they're not in. And in terms of the big fundamentals, I just want to explain what I mean by big fundamentals. I mean fundamentals that are not going to change quickly. Now, in terms of big fundamentals, you don't need to look at every single news release at all. You focus on the big fundamentals that aren't changing. Now, let me give you some examples. Now, a few months ago, back in September actually, we decided that the Australian dollar was going to break to the downside. Now, how did we know it was going to break to the downside? We didn't. Looking just at the chart, it was in a sideways consolidation. You could argue it was in an uptrend, but we knew that commodity prices had turned down. Historically, that means that the commodity currencies turned down shortly afterwards, and the commodity cycle, up or down, tends to last for years, not a few weeks. So as soon as the Aussie broke down, we were short, and we also knew at the time, and it was pretty obvious from the news, that China was slowing up, and this was going to have a big impact on Australia. You're not going to turn around the economic cycle of China quickly. So those two big fundamentals gave us the alert to get in the Australian dollar short, and more importantly, to hold it. Now, to give you an idea, we set a target of 65 on the downside and got in at 92.50. Now, at the moment, we're trading at 74. That is a huge profit. It's only happened in a few months. And it's just those big fundamentals. We're not interested in individual reports. We want the big fundamentals. So let's take one that might be coming up now. Let's take Euro USD. Now, at the moment I'm doing this video, and it's the 12th of July, you've got a lot of talk about the Greek exit. If Greece exits the Eurozone, the Euro will go down. If it stays in the zone, the Euro's going to go up. Well, our view is the Euro is going down anyway. If you look at where the Euro is now, it's just below 112. It only got as far as 114, and that was before there was the view that Greece would be exiting the zone. So if Greece stays in the zone, what's going to happen? Well, possibly you might get a rally to 114. But it should fizzle out up there. If it breaks lower on a Greek exit, it's probably going to go lower still. The Greek staying in the zone doesn't make much difference to the big fundamentals. Let's just look at the big fundamentals of Eurozone. They are printing money. So they're involved in monetary easing. It's due to go on all year. If you look at history, at the other two nations that did a big amount of monetary easing, the United States and Japan, the two currencies fell by an average of 15%. So you could say, well, that really does point to the euro going lower on those interest rate differentials, because monetary easing means that interest rates are kept low. So traders will come in and basically sell the euro, buy a higher yielding currency. In addition, if you were to take euro USD, you've got the US just about to raise rates, which is going to make the interest rate differential wider. You can also just look at the general health of both economies. The US economy is in far better shape. So if you put the Greek exit aside and look at the big fundamentals, they are very much in favour of the USD on the euro. So how far could it fall? Well, we think it could go down to 105, then to par, and then probably target the lows, which were made back in 2000, around 85. If you go back to 2000 and look at, compare the euro and the US dollar then, compare the euro and the US dollar now, the US dollar is in far better shape against the euro than it was back in 2000. So what I've done there is I've just given you a quick example of what I would consider the big fundamental picture in the euro. So, Greece staying in the zone doesn't affect the big fundamentals. It can cause a price spike to the upside. That will be a selling opportunity in line with the big fundamentals. So if we get down to par, that is over 1,000 pips. Now, in terms of the fundamentals, obviously, you could say they're subjective. Other people may not agree with me, but I think most people would agree with me in my analysis of the big fundamentals there. So all you have to do is focus on them. So what you want to be looking for now is be alert for a big trend change in the euro to the downside. Now, what I want to do is just introduce another tactic that you can use in following the big trends, and it's this, that a lot of people will still find it hard to hold a big move, when they're up several hundred pips and they see those retracements against them. There is the temptation to bank that profit. So the way to avoid doing this is to run two trades. Now, what you do, and this is what we've been doing in the Australian dollar and we'll be doing in the euro, is you put in two trades when you enter. Okay, let's say with the Aussie, when it ran to oversold, we would take one of those trades out, okay, to reduce risk exposure, and then when the Aussie corrected oversold, we'd put it back in at a better price. So that means we're always in the trend, and we can control the risk by revolving half our trade in and out the market. It is one of the most effective tools for helping you stay with long-term trends and also, reducing your risk at the same time. Now, the strategy is very simple, and you are focusing on the long term, so it is actually perfect for traders who do not have a lot of time. You're not after every twist and turn in the market. That's very difficult in my view. Catching the big trends by using the big fundamentals and then timing your entry on the chart. It's one of the most effective ways of trading in my view. It's very simple. Anyone can master it. You don't need to have a big in-depth knowledge of economics. You just have to use a little bit of common sense, see the big picture, and then you can ride those big trends, and you'll be surprised at how much money you can make by just using this simple strategy. So thank you very much for watching me as per usual. If you've ever got any questions or queries, please feel free to email me.